Hi all, welcome to Navia Markets Ltd. Hope you all enjoyed the rally in Autoline Industries, our previous pick. If you missed the rally or if you are looking for another such investment pick, then we have come up with our latest lucrative investment idea, that is Subros Ltd. Before taking you through the details of Subros, let us just give you a glimpse of how strong the outperformance of Autoline Industries has been from the point of time we have generated the call. It has fetched almost 26% returns in less than a month, that is from September 2nd till September 30th. When Nifty returned 8.8% in the same time period, and the outperformance compared to market is near to 18%. If you see not just the market, but compared to the whole sector, that has outperformed very significantly. It has outperformed the whole sector, and the outperformance will be shown in the coming table. If you see, Autoline Industries has been the second best stock in terms of returns from September 2nd to September 30th, and these prices were taken as of 12 PM on September 30th. And if you see, after Lumax Auto, it has been the best, not just auto components, but we have taken even auto stocks. Compared to all this, Autoline Industries has been the best. Has been the second best. So after Autoline, we have come up with Subros. This is also from the same auto component space, but this has a little bit higher, longer term investment horizon, and this is more a value pick because the valuations are pretty lower at the current levels. If you see the company profile, it is basically established in 1985 by Mr. Ramesh Suri and his brother, for the manufacturing of air conditioning systems with technical collaboration with Denso Corporation. Its main customers include Maruti, Tata Motors, M&M. And the specialty is that this is the only integrated manufacturing facility in India capable of manufacturing the entire AC loop. Now, if you see the investment argument, yes, I already said in Autoline Industries report, here also I reiterate the same thing. There is huge demand for auto components. There is a huge shortage of auto components that has made the main auto players like Maruti, Tata Motors and all to increase their lead time. There was delay in their manufacturing. They had to cut their production. These are all happening because of shortage in auto components. That means there is huge demand for these auto components, and because of the demands, these auto component players are increasing their capacity significantly. So only we look at this auto component space, and now again we feel that there is still value left in this auto component space, and Subros is one such value pick with very cheap valuations and strong growth prospects. And if you see the investment argument details, then the first point comes as Subros is the largest and only integrated manufacturer in India in air conditioning systems. And its future outlook looks very good because its main customers are Tata Motors, Maruti and M&M. And all these three customers have been recording great sales over the past few months, and even their outlook looks good. So considering their positive outlook, we can also extrapolate it to Subros, and does the revenue visibility for Subros look good over the coming years? If you see in terms of valuations, it is one of the cheapest stocks available in the market at 9.5 times its trading volume on DPS. And if the next quarterly results comes good, these valuations are bound to rise, based on the quarterly, improvement in quarterly performance. And in terms of valuations, it's one of the cheapest among the mid and small cap auto component stocks. And the main point in picking this is, it has a huge expansion plan of almost doubling its capacity in the next 3-4 years. And surely this kind of a capacity expansion will result in significant rise in volumes. And if you see, if you break up this capacity expansion, you can see they are starting a plant in Chennai, they are starting a plant in Sanand, Gujarat, and the Sanand plant will be used, to supply ACs to Tata Motors Nano. And as Nano's production will increase significantly going forward, that will also be reflected in the growth, rise in volumes of Subros. And the Chennai plant will be used for supplying ACs to commercial vehicles. And here is another segment, commercial vehicles is another segment which Subros is looking at now, focusing more, and in this segment they can expand their customer base, and also they can have good margins, and going forward this will improve both the top line and bottom line. And if you see, Subros has been able to maintain its market leadership for a long time, and it has a market share of 41%. And this is because of the technical collaboration with Denso, and they were exploiting this technical collaboration to the maximum extent, and then they proved to be one of the most technologically advanced companies in this particular field. And if you see the basic financials, net sales has grown at a CAGR of 9%, and the bottom line at a CAGR of 7% over the past 10 years. This growth would have been a little better, but because of the recessionary effect on the company, the sales were a bit dampened. Sales as well as profits were a bit dampened. And from a valuation perspective, we see the stock is presently trading at 9.5 times its FY 2010-11 EPS and 8.1 times FY 2011-12 EPS. And it's clearly visible that it's one of the cheapest stocks at this valuations available in the market. So considering the growth opportunities, as I told, in terms of capacity expansion and also in terms of the huge demand for auto components, ACs, we can see that this stock is available at very cheap levels, and it's a wonderful opportunity to invest at these levels with a target of rupees 61, that is 24% returns in 8 to 10 month period. As the growth of this company is going to be, over the coming years, gradual growth, so it's better for the investor to stay invested in the company and grow along with it. So it's better to invest with a long-term perspective. These are the projected financials. We have, the company has projected 1,200 crores of revenue for 2010-11. We have reduced it a little, and even then we have gotten a forward EPS of 9.5 and 8.2, which are very low. And if you see the risks involved, the steep rise in commodity prices like steel and others would affect the raw material cost of the company, and also sharp depreciation of rupee against dollar or yen will have a negative impact on the company's financials. And based on the many positives what we have stated in the company, we recommend a buy in the company at the present levels with a target of 61, and this would fetch good returns for you in a 8 to 10 month period. Thank you all.